On my far left, Stephen Forth is the Managing Director of SapientNitro. And Stephen, fair to say that you are in the advertising game, is that right?
Yeah, I spent quite a few years in advertising, and then the last 5 years, obviously, due to the digital disruption globally, we've moved into quite a bit of digital technology work.
And just before we move on to our next panellist, you were saying that John Deere's a client, is that right?
Yeah, interesting conversation. John Deere, for those who know John Deere, the Harvester Group out of America, we launched a satellite for them, and so each of the harvesters obviously interface with the satellite, and they're basically human, void of any human contact, so that the harvesters operate remotely based on the satellite information regarding soil texture or atmospheric conditions for optimum planting or harvesting. So it's quite an interesting area when you talk about satellites.
Fascinating. Please make Stephen very welcome. Beside him is Dave Maunsell. Dave is the Managing Director, Accenture Digital, Australia and New Zealand. And Dave, who are among your clients?
We've got 25 clients we focus on across Australia and New Zealand: banking, government, products, resources. I'm going to talk about a couple today. Some big digital clients. Commonwealth Bank's one of them, Property Exchange Australia is one of them, and I'll no doubt talk about Telstra as well during some of the discussion.
And one of the cool things you brought to our little pre-discussion was, in terms of industries pushing the boundaries, the surf lifesavers down on the beach. What are they doing?
Yeah, this is exciting. So there is a Surf Life Saving Australia running a pilot at the moment using drones off one of the beaches up the coast here in Queensland to look for patterns that could be identified as a shark near a swimming beach. They alert the pattern to the surf lifesavers on the beach, and the surf lifesavers go out and do an eyeball. Think about that in the future, having drones watching the beach for sharks to forward alert lifesavers. I think that's a fantastic idea to keep Australians safe, and we should be thinking about how digital, amongst other things, can help keep Australians safe in all assets of our life.
Terrific. Please make Dave welcome. So that's the farmers and the surf lifesavers. And finally, we have Colin Barnard. Colin is the finance industry leader at Google. And Colin, do you want to take over the world or just most of it?
I guess we'd like to get everyone to use our products every day. It's what we call the toothbrush test. So if you can use them twice a day, then that's our aim.
Yes, but you're a force for good in the world?
I think so. I think that a lot of the time we're misunderstood. I think there's a lot more fear out there than reality. What I see internally from the founders is very much a desire to remove points of friction, try and solve some of humanity's biggest problems. That's not to say that in doing that, sometimes we might sort of accidentally trample on people's patches, but I don't think that's the intent.
Well, let's see if we like you in the end. Please welcome Colin at this stage of the conversation. We can be polite to him. Now, do we have the results of that survey before we get underway? All right, so budgets. 13% of people say budgets stop you from innovating. 55%, there you are, say legacy systems or IT integration. The need for an urgent solution, no, that's not it. Unsure, a bit. And 20% say you don't have the right personnel in place. All right, so look, I've got some ideas of how we might run this conversation, and I'm happy to talk about farmers and surf lifesavers, but I don't want you guys in the end to be sitting there saying, superannuation, anyone? So could I ask you to work with me to try and turn this conversation into looking towards what this means for the superannuation industry by putting pertinent questions on this screen for me. Use the ask a question function in the app, because I really think this is a great opportunity for you to ask those questions, particularly in this session, and they will spring to your mind. All right, so look, I'll begin and stop talking in a minute. I read a report yesterday, Colin, in Computer Weekly that said banks are more worried about tech companies than the threat from new banks. According to the Economist Intelligence Unit, the EIU report revealed that 36% of banks think technology companies are the main threat. So talk to me about what you're doing in financial services and why it scares the bankers.
I think the reason why they feel threatened is because technology can move so quickly, and it's something that they think that they don't understand. And yet, if you actually think what a bank is, fundamentally it is just an IT infrastructure that's just moving money around the place. And so actually they are IT companies. It's just sometimes they also get caught up in being community organisations, by having branch networks and those sort of things that sometimes get in their way. And so their legacy infrastructure enables other people to sort of come around the side. I don't think they need to be worried about Google. I think they need to be more worried about two guys in a garage, which is how Google and most of the Silicon Valley startups sort of came to be. The point is, if you stay relevant and you stay with what your users need, then you shouldn't feel like you're going to become a dinosaur. And I think, Dave mentioned Combank. They do a fantastic job, I think, of staying relevant. Although, obviously not, 23 million people isn't the world's largest population. Combank is one of the biggest banks in the world, and they are one of the most innovative banks, I would say, in the world. And they stay very close to that. So they've hired people from Silicon Valley who are in there in the innovation team, pushing the boundaries. And so last week they launched their tap and go feature through an Android phone. So I'm now going up to terminals, not with a little card stuck on the back, but now using my Android phone to pay for purchases using their app. So they keep themselves relevant, but they're also obviously worried that they're going to miss something. But I think as long as if you understand what users are doing and you keep an eye on those things, and potentially you're prepared to either buy those startups or understand what they're doing and pull that talent in, then you've got nothing to fear.
Dave, these people take very seriously the safe and prudent investment of people's retirement incomes. What else do they want?
Customers?
Yes.
The million-dollar question. I just want to, before I get onto that, I do want to echo, the banks worrying about technology companies as a threat. I think if they lose sight of what customers want and they fill their lives with forms and friction and fees, then technology companies have the means, the agility, probably some financial clout as well, to offer some services that help customers get what they want from a financial service provider at a point of sale. And we're seeing that. We are seeing entrants in the marketplace. I think there are 5 million Australians with active PayPal accounts using PayPal to bridge the friction between certainly the online experience and exchanging value. So I think any of those organisations that aren't focusing on the customer do run the risk of losing some serious business opportunities to maybe a technology company.
And do customers know what they want, or do they just know when they're not getting it?
We know we're not getting it. And I'll give you an example that happened yesterday on my way up here. I'm not going to mention the bank, but grabbed something to eat. The point of sale was branded a certain bank, and the customer in front of me used a card from that bank. And the person said, "Oh, that's going to be another 2%. And I could see the customer going, "That doesn't compute, because maybe I've got the mortgage, I've got all of this other value with them, and then the bank's going to sting me for another 2% for using my money to do what I want to do."
With my bank.
They didn't. They changed their product at point of sale. So they used another card.
So, okay, when they're faced with a situation, they know what they want.
When customers are faced with choice to do something that benefits them, statistics say they're more likely to do something that's going to benefit them.
And Stephen, we saw in that video to start with that you've got all these different apps. You can buy apples, and you don't have to have them rolling out of the bags down the street. You can call a cab. You can do all these things, these impulsive, quick things, by just tapping on your phone. How are superannuation trustees supposed to react to that? Do we really want people to kind of go, "Today I feel like cash. Tomorrow, I think I feel like changing my bit"? We don't actually want to create that world, do we?
Well, it's an interesting question. I think probably the reoccurring theme for all of our speakers today will be in the area of customer experience. So, we're seeing so much disruption, and the disruption in the marketplace is not really due to technology, it's due to what the customer wants. So, one of the areas that I was going to refer to is the area of trust. The banks in particular are looking to try and build trust up amongst their customers, and I think any of those examples you put forward today is about what the consumer wants out of the marketplace, what they're looking to disrupt. I think Uber is a classic example of something that came along, people have adopted it because it's just a given thing.
And is it so from the superannuation perspective, is it about having some whiz-bang app that has colours and asks you questions and makes you feel loved and wanted? Or is it actually about delivering you a better or different service? Which one's it about?
Well, I personally think it's about service. I think he who puts forward the best customer service is going to win the day.
Okay.
There's no question about that. I think the example that David put forward about that banking situation, 2%, I've been caught out myself in that regard, and it is very annoying if I've got all my financial products with a particular bank and then I get let down at that moment of truth, then I think it's a very disappointing thing. So customer service to me, or customer experience, I think probably more the terminology these days, is the critical aspect.
Okay.
But let's say a customer did want to jump between products during the course of the life cycle of their...
Just bring your mic just a fraction closer.
Well, let's say a customer does want to jump between the products that they've got exposure to during the course of the life cycle of their life, accruing funds to ultimately retire and draw down on. If that's what they want to do, then there is an opportunity to get them the right education, the tools to do it, and the framework to allow them to do it. Because if that's what they want to do and you're not supplying that, that's where somebody is going to see an opportunity to introduce something they do really well to disintermediate you, or even potentially take the customer from you.
So you don't save them from themselves. You just let them do it.
Let the customer do it.
Even if you think it's really the wrong thing to do.
Yeah. You've got to go and get advice from people. You should be able to ask machines, what if I do this? What if I do that? Go back for your advisor for some other advice. Some research we did in Europe last year, not necessarily with the generations that have grown up with the system that we're currently running out, but the kids that are coming through the system at the moment, the data would suggest that they are going to be more comfortable making decisions on insights driven from data that machines are ingesting and analysing. So there is a market out there, maybe not for the ones that are close to retirement now, but for those that are coming through the system.
I mean, that is a part of the conversation that every trustee, I guess, has. Maybe not in the terms I'm describing it, but when you're looking after people's money for 30 or 40 years, you want to protect the 70-year-old person from their 22-year-old self. That's why they call them trustees, right? So, can something like IBM Watson, which is you can describe what it is, can that save people from themselves? This is an IBM system which is artificial intelligence that tells nurses working on a cancer ward what are their 3 best options, and often they will take that. Does that have some application here?
Look, I mean, we were discussing this before the session. So IBM Watson is a supercomputer. It's machine learning. As it sort of, the more that you put into it, the cleverer it becomes, and the better the answers spit out of it are. The powerful computing is already here. The mobile phone that you have in your pocket is plenty powerful enough to cope with all the questions you're likely to come across in superannuation. I think the issue of we're kind of talking about empowerment and having that information. Most of those things are somewhat simple and linear problems to solve. So, I have a pot of money, I can invest it, there are 5 different choices. The computer can work that out fairly quickly. The point is, as you sort of start to go through, things become more complex, and that becomes a really interesting engineering solution for someone like Google. If you think about driverless cars, it's the same thing. There's hundreds and hundreds and hundreds of points, but it doesn't mean that it can't be solved. If you set the vision, and at Google we sort of call that 10x, and we have a lab called 10x who work on these problems, then you can sort of, if the goal is I need the best superannuation product possible, then a computer, given a certain amount of inputs, will be able to work out those things better than anyone in this room.
And which is harder? I mean, you can show me on my phone, a bunch of colours that tell me the different ways that I can invest. I can be ultra-conservative or whatever, and it can replicate the piece of paper that I get from Australian Super, and I hope you're all well and happy and don't ever have that 3rd glass of wine if you work for Australian Super. You're working for my retirement savings, and I need you to be diligent and on it at all times. But you can put that on my phone. That seems to me to be the easy part. The advice is the hard part. How do you bend this phone and bend this digital world of ours in order to give the advice that must go along ethically with the choice?
And I guess as Dave was mentioning, there's a sense of empowerment, and I guess Google sort of generally believes in providing the users with all the information that they might want to get hold of and making better decisions. And if you actually think, I'm sure that we all do this, the sort of the Dr. Google, I'm feeling a little bit ill, I've got a rash here, and my left finger's aching a bit. I type that into Google and try and find that out. What's going on. The last time I went into the doctor, he did exactly the same with the same symptoms that I sort of gave him, and he came up with the same answers that I'd come up with, and I walked out, with a gap payment to pay. And I was thinking, that's interesting. That, you have the right to write me a script, and I can go and get the prescription, but you didn't actually really add value. And I'd say if someone can make a decision about my life and life and death decisions, I think we can probably do that in superannuation.
The Watson example. So LifeLearn Sophie is going to launch soon, sometime early 2020.
LifeLearn Sophie.
Yeah, so LifeLearn Sophie is Watson's solution for vets.
Okay.
Natural language solution. And Sophie has ingested every bit of research that's ever been written about the treatment of cats and dogs. Vets that are in the beta program will be able to not type anything into Sophie, but ask it in a natural language, the animal is suffering these symptoms, what are your recommendations? And Sophie will say, based on all data, based on all of this, this is what I believe is the prognosis and the diagnosis for this particular vet. For this particular animal. And the vet then, with their experience, uses that information and their capabilities to take the next steps. I mean, could you imagine a future where you went and sat down and had that conversation with your advisor, and you talked to the industry's equivalent or the brand's equivalent of Sophie, who ingests all of the information that are available for all the investment options over the near term, medium term and long term, consistent with your goals, your personal situation, and give very analytical advice on what it believes the right strategy is, with some feedback on what ifs. I see that as a very, I mean, if Sophie's going to do it for life, I'm sure we'll be able to figure out how we do it for investment analysis as well.
Yeah, I tend to agree with you on that. The only thing I'd say is what's missing is the emotional aspect. I still think there's a huge, we live in a physical and a virtual world. We go shopping, yes, in shopping centres, but we also shop online, but there's an emotional aspect missing, and I'm concerned from that customer experience that I refer to and all the people in this room is what is that aspect of humanity or emotional aspect it can bring to the conversation? I'd hate to think the computer says, you're going to euthanize my dog.
Right. Okay. So, let me,
the computer says no.
Let me just be clear. So do I think that the machines are going to take over every interaction that happens in the future? No, I don't. No, I still see people buying from people in the future. In actual fact, the research that we did last year, across all of the generations that buy and consume products from the industry, they didn't want to buy it off Facebook or buy it. They want to talk to somebody. The point is more that when they do want to talk to somebody, to make sure they're getting the best from that interaction by augmenting the individual's experience and perspective and the personal relationships associated with selling and advice with everything a machine knows. And if you do ask the question and it comes back and says, outside of the pure advice structure, 70% of people, that's the Amazon experience, 70% of people that bought this product also like this one as well. You sort of start to get a feel for what the crowd's doing that really does help you.
But aren't there people in the room thinking, just because you've gone like on Facebook, as one of our panellists said in a conversation yesterday, this is a great investment for me. Yeah, but, I've got a, $300,000 house and no retirement savings, and the person liking it is in a very different financial situation. That's scary stuff, isn't it?
So I'm not suggesting that you use likes for investment.
Oops. Honey, I shrank the retirement
coming up in
pot.
conversation with every client at the moment, how do I monetise my likes? So that is one of those wonderful questions. Well, I'm getting 3,000 or 300,000 likes on my digital area. How do I monetise it? Well, it's a long story.
But investment managers are starting to look at that. So there are sentiment monitoring services that exist out on the networks that allows, with some technology, to go out and get a feel for what markets are thinking, where markets are heading, what the chatter is, and aggregating that at a point to inform a part of an investment decision that an organisation's making for a play in the future.
I want to move on. We've got a question on the screen. Should we be super funds that offer a digital channel or digital companies that offer super? Just a brief answer to that, and we'll come to the Move-In Bank example. Colin, what do you say to that?
I guess my brief answer is Kodak sort of obliterated itself because it thought it was in the business of photochemicals, it was in the business of memory keeping. I would say you're in the business of making people's investments grow through whatever channel that you can communicate to them with. And that's going back to the bank thing. Fundamentally, they're an IT infrastructure that moves money around the place. Therefore, bank branches are not necessarily the forever future of banking, I would suggest.
If we can move on to the example of Move-In, and this is Brett King. He's Australian, isn't he, Brett King? From Move-In Bank. So he had this idea that essentially, you're saying the Commonwealth Bank is kind of caught up with now. So it's a dedicated mobile cardless bank, exclusively online, uses social, mobile and gamification technology, and uses a little gizmo you put on the back of the card. They did a deal with Visa and you can wave it at the point of sale. Now, at the beginning when you join up with Move-In, they get you to do a Myers-Briggs type personality quiz. And then basically you can set some goals on your spending, and it'll say to you as you're standing in David Jones about to buy yet another pair of shoes, I'm not talking about anyone's experience in particular, it'll give you a little thing that says, well, you've said that this is how much you want to spend on stuff that you don't eat this month, and you're really in the orange zone already. So it gives you some relativities about the spending, and it tells you your balance and all the rest of it, and you can wave it and do it. Can you see a comparison here with a retirement pool in terms of a device that not only gives people advice about how they should invest, but helps them through that initial test that Move-In does to start to think about what their goals are for their retirement savings? Steve?
Well, I guess the first point to make is that any brand or product has done their research. So obviously they've done a research and they've seen there's a opportunity in the marketplace to provide this particular customer experience. So, I think it's an interesting area. I think it's a bit of a generational thing personally, but it works for them, and that's what they've provided. Yes, the superannuation industry can do it, because I don't think there's any such thing as you can't do anything anymore. I think, technology, we always say technology is an idea waiting to happen. And if you think about that, if Me Bank or any of these banks come up with a particular idea, well, technology will deliver it for them. And if it's going to provide a better customer experience, then yeah, and if it's going to provide an outcome which is building trust with that customer, and therefore the engagement with the brand or the superannuation in particular with the customer is strengthened, then I think that's a good outcome. So I think any technology, I don't think technology is the prohibitor, it's just an enabler.
Yeah, so whether that explicit example is going to relate to the experiences that you're looking to extend to your customers in the future, I think knowing more about them, their personal situation, their goals, their circumstances, health situation, lifestyle choices, and using that to give them the best advice you possibly can to make the rest of their life fantastic. I mean, that sounds like...
And so it's advice relative to their own goals that you've squirreled out of them.
Yeah, many to one, focusing very tailored advice. And if something like that gives you the insight into coming up with exceedingly tailored advice, that feels like something I would buy into as a customer, not just a consultant.
Yeah, I mean, I'd say you're probably more likely to spend a bit of time answering honestly those sort of questions and sitting in front of a broker and or advisor and them.
And that's tough when you've got low-cost super, because there's not that opportunity, right?
Yeah.
You're trying to drive down the cost of this. So do you see that as useful? No, not particularly.
I mean, certainly technology is a great way of reducing costs in many senses, not if you're going off and buying the IBM Death Star to solve a small problem. But I think offering those sort of relatively cheap solutions. I mean, I just sort of, so my partner's Brazilian, we've got a relative coming over who doesn't speak any English, and so about 3 weeks ago I was like, oh shit, I'm going to have to learn some phrases. So I went onto my phone, downloaded a thing called Duolingo, which I can heartily recommend, and it's sort of crowdsourced, and this guy from Pittsburgh University invented that. And within the space of 3 weeks, I've already got enough that I think I'm not sort of crapping myself when this guy turns up and...
You can say hello.
Yeah, and offer him a beer and ask him what his mother does. It's just it's really smart, of how you sort of engage with that app, and it's really engaging to do and to learn. And there's no reason why. And that's the sort of move and bank thing. It's almost sort of gamifying someone's objectives and helping them along that path. I think that's great.
And do you see that as something that the superannuation sector could do when they do struggle with engagement with people? I've got to put this money aside. I'm not thinking about the long term. I'm thinking about tomorrow, and I can't afford a house, and that's all I'm thinking about.
Well, certainly, I think that sort of idea of I've got a little bit of knowledge. I can go online, find out some information, and now make some massive decisions about my super. That is probably slightly dangerous. But if you actually take what they're trying to achieve and then go back with some advice on what their goals are, I mean, that's all that an advisor's doing. But I think it's just doing it in a more engaging way, personally.
More questions on the screen, if we could, to turn this conversation back to what you might do with all of this on Monday. The results seem to be suggesting on the screen earlier that maybe there's a personnel issue. People feel there's an issue with the personnel they have on board to affect this evolution. Is that the silver bullet here?
Yeah, organisational structure is a big question that we get asked. What is my optimum organisational structure to move the business forward and transform the business in the next 3 to 5 years? I think that's predicated on what is the conversation internally amongst the key stakeholders. We encourage the CIO, the CMO, the COO and the CEO all to get together and talk. Often a lot of our clients, they're quite siloed. So you've got the CIO who's off doing something over here, and the marketing guy wants to do this over here, and operations have a completely different viewpoint. So bringing that top level of organisational structure together, and then looking at what the organisational chart looks like to drive it is actually critical. So it's I think every company that we deal with are looking at their personnel and saying, do we have the right skill sets? And if not, how do we bring them in? And what is the attitude to actually transform the business?
Very similar situation. So they've heard digital. They might know what it means, but typically it needs to start with where's the business model going, where's the operating model going, and how are we going to source components of that operating model to then drive the next wave of experiences that we want to extend to our customers. The business model one is an interesting one, though, and I think there is. I've got my glasses on. I can't. So I think what's being said there is, if you've got a culture that's obviously got the business to where it needs to get to operate the things that you operate now, fantastic. The question is, do you take the current business on the journey that you want to go on over the next 3 to 4 years? Or in actual fact, do you spin something off and let them go on their own journey for the next 3 to 4 years? Or do you have a bet each way? So that business model discussion, using some informed information that helps you get to a decision as a business and where you want to take your customers, really important. And once you make that decision, you execute on it. You might know more about this than I do, but these guys do this pretty well. So Google have got their core business, and you've probably had some experience with that. They've also got this, I don't know, I could describe it as an incubation engine outside of the organisation called Google X, and looks like a play zone for all of the really cool things that we can expect.
It sounds like the guys who wear different coloured socks to work. Is that basically?
But I'll tell you, different employment contracts that are incentivised to figure out ways of things that are inside of X to get inside of Google or to be launched as a new business.
So that even within Google, Colin, there's an acknowledgement there's a different culture within Google proper and within Google X.
Oh, for sure. An organisation that was 500 people at the start could be really innovative. That's where they came from. As time goes on, the organisation's now 50,000 people. As much as our culture is all about, we're sort of KPI'd on innovating in our own jobs, we're not going to be able to disrupt our own business, and so that's the idea, is to be able to find those new things. And either we find them by acquiring companies, or we go and try and invent them. And as Dave said, it's a completely separate building in Google. My badge doesn't work in that building. They kind of
they all speak Portuguese.
Exactly, they all speak Portuguese. I was with a large insurance company last week, Australian company out in Mountain View, and they were sort of fascinated by this. But I was actually really interested in the inverse, which is the way that business is thinking. They have a sub-brand, which they were saying they've sort of set up to basically kill one of their other more traditional brands, because the idea was, if we've got this innovative brand over here and it's killing this, at least we get to pick up the pieces. if it's also killing our competitors, that's absolutely great, and we've learned and our business will be able to move with that. And I thought it was a really smart and intelligent way of doing it. Just as Dave says, hive off a part of your business and give it the freedom to do it.
And give it the freedom to eat you.
Yeah. And that's, if Google X comes up with a better solution to search, great.
Yeah, it's a business decision, but yeah, that's right. And it is, for some businesses that are out there operating in a world that they've, incrementally changed for the past 2-3 decades, the thought of setting up another business is going to go after the customers. But if that's the way to get to the point where you're in a spot in another decade's time where you're surprising and delighting even a larger customer base, it still feels like a good decision. It might be a hard one, but I just think, possibly if you get to that decision, you're confusing bad news with bad advice.
And how hard is that to do? I mean, I know, isn't it IAG who underwrite Coles insurance, the little red car, but they also offer, full service insurance with NRMA. Like, how does that work? How do those people come up to the 5th floor in the lift together every morning without any bloodshed,
Probably got different swipe cards there, I would think. Well, I think this is what happens. I don't think there's anything surprise about it. One of the questions on the table here is about should there be a digital technology company or whatever it might be. Coles are disrupting the marketplace. Australia Post are doing it. Everyone's providing. One of our clients is the RACQ here in Queensland, and their particular product is obviously roadside assistance, similar to NRMA and down in Victoria, etc., New South Wales. So the roadside assistance has been completely disrupted. It's become
cars
so
don't break
commoditised.
down.
Everyone's offering roadside assistance, so they need to redefine their business and increase their customer engagement. I keep referring to it as customer engagement. Their particular problem is that they reach a customer maybe once a year or once every 3 years when they get rescued or get their invoice every year. So how do they increase their engagement? And I think for our superannuation friends here is how do you increase your engagement with your customer? They've got massive data. We're talking about Coles and Woolworths, and we know that Woolworths have bought Quantum, and we know that the movement of the information of data, everyone's got a lot of data. Everyone's heard the word big data. But you guys hold data on your customers. Well, how do you increase that engagement? How do you increase the relevancy built on the back of trust? So that there are some insights, I think, from whether Coles are doing it or whoever's doing it. It's predicated on great data.
And maybe that comes back to your point, Colin, about who do you say you are and what do you say you're doing. If a bank is an IT platform that moves money around, what's a superannuation fund? What is it at base?
I mean, for me, I guess I'm putting my money with someone who's going to be able to invest it wisely and give me a greater return. But somewhere along that journey, and I guess this is why people sort of trip out and end up in SMSF, is somewhere in that journey there was either a lack of communication so that I didn't feel I needed to sort of stay with your fund, or I found a better alternative. So you either kind of, didn't engage me, and I don't know who you are really, or you might have pissed me off, or I found something better and I didn't even know that you maybe offered that. So I think that engagement process is really key, and I know that the insurance companies have exactly the same thing. It's renewal, it's suddenly $1,000 and I didn't get anything for it.
Yeah.
I mean, thank God I didn't crash my car or my home didn't burn down, but I don't sort of thank God at that moment. I think it's $1,000 I've got to pay. The insurance companies are desperately trying to work out how to engage with me so that by the time it's $1,000, it's like, well, I've had all this value from them and I've had a conversation, and maybe they advise me that this one for $800 is better, and I supplement it with something for $300, so they win out of the whole deal. But that's the key, I think, is engagement.
Okay, there's a question here I want to come to. What does the panel think are the top 3 obvious things that super funds will not still be doing in, say, 3 years, especially in relation to how they service members or any other area? Dave? Top 3 things that they will no longer do. Send them letters in the mail?
Well,
I don't know if Australia Post will deliver them, will they? Well, not quickly, anyway.
Hope is my strategy.
You can pass it to somebody else.
No. Let me. So chances are at the moment, what are we seeing? What are we seeing outside that organisations are doing outside the super industry that might provide some reflection on some things?
Because I tell you what, at this point, if I'm these guys, I'm confused. Am I doing weird things with people's phones in order to service them better? Am I doing it to increase confidence and trust that I'm investing their money well? Why am I giving them whizzo colourful apps on the phone? What?
So some of the organisations that we've mentioned up here to date, how they've started their journey towards a more digital set of services and offerings and putting the customer at the centre of their experience, they've stopped actually with the traditional way of going about changing the organisation, which is gathering the business requirements, doing a design, doing an implementation, and doing all of that in-house. Where we are seeing organisations do things significantly more successfully than they have in the past is really putting themselves in the customer's shoes and embracing a customer-centric design, often called a service-based design approach to the products and services they are offering. And solving, not because there's this process in the back office that takes 2 days, solving the experience with the brand based on what the customer wants. And if they want less forms, and if they want all of those other things, baking that into the set of changes that make their way back into the organisation.
What about regulation, though?
What about regulation?
Well, sometimes you can't. Sometimes the regulation lags the innovation.
All of the businesses, whether it's super or a telco or a bank, they all operate within a regulatory framework.
Okay.
And service-based design does not ignore the fact that regulation exists.
You just click the box and say, yes, yes, yes. I understand.
But what it does is it takes friction out. And if it turns out that the way you've thought this is the best way to get friction out, but you put yourself in the customer's shoes and they say, well, no, that's not. Let's take Property Exchange Australia, because I do want to talk about that. They're a very regulated environment, and what they do is they electronically lodge and settle property transactions in the Australian marketplace. And they have created a digital bridge between all of the land title offices, all of the state revenue offices, all of the banks, and 20,000 lawyers and conveyancers. And in that process, there was some regulatory hurdles that needed to get over.
I mean, they're ridiculous. You've got to sign with a black pen.
Well,
You've got to have,
a
blue-eyed solicitor sign the form.
You don't.
It's ridiculous.
Your solicitor has a digital signature. They can use that. They just upload that into the platform and through it goes. So there are ways to digitally solve some of the friction points that you've previously put a process around that is going to make the experience significantly better than the one you're currently extending at the moment.
I think you've dodged the question. Stephen, what are the 3 things?
Well, I think regulation, or I think you'll be much more deregulated. I think the customer's driving a need for a much more deregulated market. I think you'll be highly differentiated. I think everyone within every industry, and I think the superannuation industry is no different, will want to have some fairly significant differentiation. And that differentiation could well be via an app that you keep referring to, or it could be by a better
So number 1 is don't look like everybody else.
Yeah, you can't. The customer is looking. So if you can't differentiate yourself in the marketplace, then you become a Me Too product. So I think that's, I think deregulation, I think definitely much more differentiation, and I think the strongest will survive. I think there's going to be some commoditisation across every industry because that's what the consumer's looking for. So I think they're the kind of the 3 things I think will change. Much more competitive industry.
Well, I don't think I disagree with any of the things that have been said. I'd probably add on to that is that you guys are going to end up really obsessing about data, and it's not just sort of coming from Google, obsessing about data for the sake of it. If all you've got is an email address, address at home and work, that's just not enough. Because the threat from like the Coles and the Woolies that all financial services worry about, which is genuinely I think more of a threat than anyone like a Google, is that they've got a huge amount of customer data, and with that they can then start to offer out and make assumptions on what people are up to and put relevant either offers or services in front of them.
And why is that more powerful? Why is it more powerful if you know that all I buy on a Monday morning is Coca-Cola and packet chips? What do you then know about me that helps you offer me financial services, as opposed to the person who buys bananas and, organic something?
So I think once you start to see patterns in data and you say, okay, well, all the people who seem to buy Coca-Cola and chips on a Monday, die earlier.
Yeah, the actuaries are going, well, yeah.
Then that already gives you, I think, a sort of a hint as to, maybe the sorts of offerings that you could put in front of them. If you know that they've got, they've moved house, but they probably haven't updated you guys, but they've told some authority that they've moved house. They're commuting a different route, and so therefore, if I'm, Woolies, I can offer them a different type of car insurance, maybe risk based on sort of how many miles they're doing or kilometres.
If I start buying nappies, you know a whole lot about me.
Exactly, and so therefore, suddenly, rather than that mailing coming to me every single year on the doormat and that says, here's my super statement, if I can sort of then, in that EDM that goes out, or in my app, or whatever it happens to be, that communication piece of, hey, now it might be a great idea to review your circumstances. We have this other sort of options available to you. Maybe now is the time time to switch into cash and out of riskier investments, whatever it happens to be, by getting those sort of picking out the signals in the noise, then you can start to put things that are more relevant. And the things that are more relevant to all of us in our lives, we tend to go with rather than those that are irrelevant.
But here lies the problem, because in 3 years' time, to refer back to the question, everyone in this room will have more data. There's no question about that.
Yeah.
It's what the hell am I going to do with that data? And how's that going to drive a financial income for my business and be able to provide a better engagement with my customer, that I can drive more products into that customer? And I might be putting a lot more products in. So I think the real challenge for every company that I see is, yeah, I've got data, but what am I going to do with it? I know that you buy nappies on a Monday or whatever you do. Well, yeah, okay, what does that mean to my business, and how I can further monetize my relationship with you? That's what a lot of people here.
But I guess I would sort of, because I'm in the sort of the advertising side of Google, I would say if you just took something simple like I'm starting to buy nappies, then if you're Woolies, then you can, the ads that you put on, say, YouTube can be to mums who are now in that sort of situation. If you can team that up and you're a superannuation provider, and therefore that's going to give you some sort of meaningful benefit in the change of services that you might offer. Again, that next ad that's after the Woolies one might be then the superannuation one, which is highly targeted to that particular audience. Suddenly you're talking to mums who are struggling to work out their finances, that might be a great time to talk to them about reviewing.
So is that just a preamble before you write blah super?
Yeah.
Yeah, up all night, can't figure anything out, sleep deprived and drinking Coca-Cola.
If it's as simple as that, and you don't even need a huge amount of skills or technology in your own organisation, ultimately, Google has all that. You just tell us, what your sort of, here's your anonymised, the customer data, and then we can just go and talk to those people in those moments. And
is there a role? I mean, there's a question on the screen about engagement. Once members are presented with good technology, no doubt they will embrace more and more over time, but how do you capture their attention in the first place? Need to create a sense of urgency and interest in super. Is that the right question to ask? Do you need to create a sense of urgency and interest in superannuation, or do you need to create a sense of urgency and interest in saving or their financial situation? Like, do you ask a different question?
Don't you? Wouldn't it be better to create an interest in your brand helping them with whatever their goals are? And if that then leads into different parts of your ecosystem for products that allow them to get closer to where they want to be next year, in 5 years' time, in 10 years' time.
Yeah, but how does knowing that I want to run a 10K race, which is looking most unlikely at this stage, in Canberra on the 11th of April, really assist with my superannuation, except that it does tell you that mortality is weighing upon my middle-aged self?
Right, okay. So maybe it's not important if you decide to tell the machine or your advisor that whether you're going to do that or not. Don't know. But maybe there is something during the interaction that you have with your advisor on a regular basis that gets them to the point, because you're talking to them about other goals that provide a different set of advice.
And maybe the key in that, Stephen, is the regularity of the contact. I don't have any contact with my superannuation. I don't have any contact with NRMA roadside assistance, which is why I let it lapse just this month.
So I ask you a question back. Who do you have? Who engages you the most? What brand engages you the most?
Oh, the NAB.
Obviously, your mobile.
NAB on the phone. I do everything, pay everything, do it all. I don't particularly love them, and they don't have a superannuation thing where it gives me a thing that says, well, you only spent this much of your pie. It doesn't do any of those things for me. It kind of tries to, but it doesn't work. But if it did and said, you didn't buy those pair of shoes, why don't you belt it into a superannuation fund? Hopefully I would never be in that situation. I like the brand I'm with, but what if you could sort of get rid of the friction between those things so that the contact was more frequent, and super became part of my whole financial experience?
You've just outlined what everyone's looking for is a better customer experience.
It's the holy grail. I mean, if you're at the NAB, they should be targeting you for a service design engagement and getting your opinion into the product team to figure out how they can extend that experience into other.
But let's say I already got religion when I saw the ad that showed what happened to industry super and retail super. Let's just say I got religion on that. Now what do I do? Okay. Now how do you ensure, does the superannuation fund become a bank or offer bank-like services like Google does in order to ensure that I'm talking to them all the time and they're talking to me?
Yeah, I mean, again, I go back to that toothbrush test. Is there something that you can offer that is going to be genuinely useful and give you regular contact? If not, then don't push it. But I think with superannuation, although the subject in and of itself might not be like the most exciting compared to all the other things we've got in life, the actual goal that it will enable you to achieve is somewhat exciting, and being able to help you on the path towards that, I would suggest, would be relatively interesting. I think when I was talking earlier about banks and branches and who they are, I mean transaction accounts. If you start to then pull that together, and that's the advantage that the banks are on the cusp of having, is having all these different things, so Colonial First State plus my transaction account plus my home loan. Once you can start to understand, I'm the same person, and okay, Colin, here's what you seem to have got an extra grand left over in your account at the end of the month. Why don't you put this over here? Here's how this will help you get to your goal.
Do you need to be a bank to do that?
I don't think
That's the sort of thing that you guys look at and say, we'll have a piece of that.
Look, I think clearly the retail banks have an advantage there, and it's a sort of potential disadvantage. But I guess with Me Bank, then there's ways of kind of this audience getting around that problem. And it doesn't just have to be only banking services. It could be you work together with an insurance company. It's just, is there an environment that you can pull this information together and make things more relevant and engaging and useful to me? And I think, saying, oh, it's a regulatory problem, or oh, it's an IT problem, I can't do it, that will then enable either the banks, or the retail banks, or the disruptors to come in around, and to Steve and Dave's point, it's solving points of friction.
I'm not 100% sure whether the question could be game, but if we think that consumers in the future want to be owned by a brand, I think that's gone. The thought of someone being owned, none of us, if we went and polled everyone here, do you want to be owned or do you want to be shared, I think we'd definitely move towards the point of being shared.
But you've got to have no friction around it. Friction and more visibility about what's going on. If you can shine a bright light. So Brett King at Movin says at the end of the first month that he used his own Movin account on his phone. He spent $400 a month on taxis. He nearly fainted, and this thing kept it down.
Right.
Okay.
So curb their behaviour. Got it.
Yeah.
But the fact that we don't want to be owned, we would prefer to be shared, means that you will need to collaborate more effectively with people in your with organisations in your ecosystem in the future. And for those organisations that do, there are business benefits and customer benefits in doing so. If you do manage to capture, the 100% of the financial services business from a particular client, fantastic, you're doing awesomely well. But chances are, your plays are going to be, how do we collaborate with others in the ecosystem to create an experience that keeps our customers using the services that we're awesome at?
So when I log on to Australian Super, I've ticked the boxes, and I don't know whether this is possible, for them to suck in my NAB data, and so my NAB data's on the screen.
Well, if that's what you want to do...
That's what I want to do.
Yeah, and they're not allowing you to do that. At some point in time, somebody is going to come along and allow you to do that.
A disruptor will come along, and
that's
bang,
right.
they'll take your business away, and then they'll own your relationship.
Yeah.
But does the superannuation fund, because we've got 10 minutes left, we want to talk about what to do Monday, does the superannuation trustee have to have this, or do they just wait until some bright spark comes along and says, I'm the aggregator app for financial services, and you put whoever you want at the apex, it doesn't matter, but on that screen you can see everything, and all of a sudden we're playing in a different world where super is part of my financial life.
Let's go back to the business model.
Daily life. Yeah, go on.
Let's go back to the business model. You made a comment at the start about Coles and IAG, and if you unpack that, you sort of think that's a pretty clever strategy on behalf of IAG. So they've opened up their manufacturing, the things that they do really, really well, manufacture insurance products.
Yeah.
They've opened that up, and they've let another distributor, using their product systems, distribute something for a market that maybe they couldn't get access to because of brand or whatever. Fantastic. So now all of a sudden you've got somebody else's manufactured product being distributed by somebody else, but you're still getting some benefit from it. Can we imagine a future where certain organisations open up parts of their core platform to let the community innovate on top of? You still keep and do the things that you're really good at and extend your trust for the manufacturing component, but then allow somebody else to get access to the things that are required to then be distributed digitally or otherwise to a customer base they're looking to targeting? Absolutely. And if you're watching, I think, so one bank's already announced that last week, that they're going to open up parts of their product systems to developers to get access to financial services capabilities.
To innovate for them.
Yeah, that's right. They're saying, look, we've got some really good ideas, and we're going to drop them out onto the marketplace with our brand. Innovate.
There's one final question on the screen, and I'll marry that with my final question. The majority of us felt legacy systems were holding us back. Thank you for pointing that out to me. So do we just throw those out and start again? I want each member of the panel to think about that, and also think about that question, legacy systems, and what's the first thing you do? What's the first thing you do Monday if you're behind the curve on this, Steve?
Well, to ask that question there on the board, and that's the question that we are faced with on a daily basis from our clients. So they've got legacy systems. What do? Do we throw them out? What's going to be the cost of investment? So looking at what is my roadmap, I guess, for the next 3 to 5 years, how much do I have to invest, and what does that look like? That's kind of what you always get faced with. And yeah, it's going to take an investment by most organisations into their technology, but it's predicated, what I've been banging on about all day, it's banging about the customer experience. The first thing I would do is look at my customer base, obviously look at my segmentation of my customer base, see what that customer experience looks like. What does it look like today? What's the technology driving that customer experience? What's it going to look like in 3 to 5 years?
So research is your answer?
Well, research in a broad sense, yes, but look at really talking to my customers and find out, like 3 to 5 years, do I want to have everything through my mobile phone? If that's the case, if mobility is the ecosystem, then what is the technology I need to build around that mobility to drive better engagement, to drive better return on investment?
Dave?
That's kind of what I know.
Yeah, a very common question that clients are asking us at the moment. No class answer, but a couple of bits of advice. If you have a look at a number of the brands that are doing successful large-scale transformation at the moment and extending new experiences to their customer base now, they've gone and they've attacked their core and they've got it ready to underpin the set of offers they want to extend into the marketplace. What they've also done is they've allowed themselves to move in a two-speed basis. So while their core's being changed and they're migrating customers and products across to, they've still allowed, through their technical architecture, the ability to change and extend some of the more digital experiences to their customer base. They haven't gone, the core's going to take 3 years, we'll wait and focus on the customer in 3.5 years' time. Really, really important.
So can you give a quick example of that? How do you walk and chew gum?
How do you
walk and chew gum? How do you build it and use it at the same time?
Those organisations that are doing that have put something like an Apogee or an API layer between the core and the customer, and they're writing innovation, new applications into the API layer, directing to the old product system. When the new product system is available, they cut them across.
So
two-speed.
Yeah.
My understanding is John Lewis in the UK did exactly that. They kind of held out as being one of the best e-commerce companies in the world. They were sort of band-aiding a really old system together, but all what the customer was seeing was pretty schmick. And then when they sort of had all they justified the business model and went on that 3-year journey, they could just lock it in at the back end. It was much easier than waiting for the 3 years.
But you have to know what you're doing. I mean, you can't fake it till you make it.
No.
And if what you put in place is just some really expensive, dodgy interface that nobody uses.
No, and that's why I guess people like Accenture exist, to be able to help and Sapient to be able to take people down that journey.
The nice thing about the API layer going in, because again, back to business decision, but that layer you can also use to extend out certain components of access to your back end for the community to innovate as well. So the same platform you're using to do the faster speed approach to get access to those core functions, if the business so decides to open components of it up, you can reuse it to support a community.
And ensure you have testing in place.
That's right, yeah.
And so, Colin, what's your best advice on how to innovate? How do you innovate?
So that, I think it just goes back to what I say. I guess that sort of Google X Lab approach is probably the one that I would pick, because I'm guessing it's going to be very difficult for you to change your whole organisation at once. But if, for example, I'm just going to throw something out there. Let's say peer-to-peer lending, you think that you can do something with peer-to-peer lending. How difficult is it going to be to get through your organisation? But give a bunch of people, a percentage of your organisation is siloed off and give them the freedom to go off and explore things like that. They will come back, and we talk about sort of 10x ideas. If you ask someone to improve the battery life of a phone by 50%, they will use the existing technology and they'll just try and tweak it. If you tell them that it's got to be improved 10 times there, they will just throw out all the rule books, they'll sit in a room and they'll try and figure it out. And maybe they won't, but the chances are that they'll probably at least be able to give you a 200% battery life improvement with some of the ideas that they were working on, because maybe they're a bit ahead of their time. And that's what I would do. I would recruit some really smart people who are just inherently very entrepreneurial. I would put them into a separate part of your business, and I would give them the freedom to breathe.
Even if the answer can be that it eats the business as we know
Yep.
it.
And equally, if they fail, those are people who have learned through failure, and as long as they're people who can learn through failure, they can then come back into the business, and they will then be able to also take your business to the next level.
All right. Please thank the members of the panel, Colin, Dave, and Stephen, very much. Excellent conversation.